Good morning and welcome to IG's early morning call. It's Friday, the 3rd of November. Let's take a look at what's happening in terms of some of the headlines this morning. We're looking for a stronger start across the European equity markets. It's been a stellar week, really, on the upside. We started off with strength, and we've got strength going into Friday's session as well, not just here in Europe, but also in the US as well. The Dow Industrials and the S&P 500 on track to post their best weekly performance this year. And it's the same for many other markets as well. No trade today in the Japanese markets because of Culture Day, but on the 24-hour markets on IG's platform, the Nikkei is up. Let's take a look at what else is happening, because today we got non-farm payrolls, a big pivot point for the week after the Fed interest rate decision midweek gave us a relatively dovish tone to things. And going into the non-farm payrolls number, we've got the US 10-year Treasury yield at levels not seen since mid-October. We're now down at 4.7%, 4.75%. But the jobs growth likely to have slowed in October due to strikes in the automakers sector, the UAW, coming to some agreements with some automakers, but there are still some outstanding issues. And US earnings late last night, we saw Apple shares on the way down as revenue fell for the fourth quarter in a row, but iPhone sales were a touch better than expected. Coinbase, meanwhile, tops estimates. At one time, the shares were down, but they recovered towards the end of the session in the all sessions stock on the IG platform. Take a look at the volatility. We are down now for a fifth day in a row, I beg your pardon, holding on to the losses we've seen recently, down at 17.14. It's one of the longest losing streaks that we've seen, certainly this year. And if you look at the first 3 days of this week, you will have heard me say that it was the worst or the strongest down strike in volatility in 3 days since March last year. So we continued to build on the downside, and this is manifesting itself in gains across the equity markets. Now you can see as a little doji star candle here, indicating that the markets are awaiting something else. I guess it's really all about non-farm payrolls out today. But it's a very, very strong day yesterday. We went into the 24-hour markets as at the close last night, higher than the cash session. So at 74.69, it's higher than cash trading yesterday. And it's the same thing for the German markets as well. And the same thing for France. In fact, we're a little bit of a negative swing there at 15,200, but we're still above yesterday's cash close, and the same on the French markets as well. So looking for a stronger start across the European markets. Overnight in Asia, as I said, the Japanese markets were closed today for a holiday. It's Culture Day, but we have seen other markets trend. And in terms of the movers that we've seen today, let's take a look at some of the stock indices outside of the Nikkei. The Singapore Straits Times up 2.1%. Hang Seng Stock Index also enjoying a lift, and also gains as well for the S&P ASX 200 up 1.14%. I want to show you the Nikkei, despite the fact it was out. As I said, you can trade this, and it is indeed still trading on the IG platform. And as I witness, we are just seeing further upticks as well at 32,388. But outside of that, of course, the markets have been open. Strong day today, following on from a strong week, looking as though we're going to get the best week we've seen so far this year on many of these major benchmarks as things start to close out on the session. Wall Street closed last night, gains across the board. As I said, the US Treasury yield falling to 4.75%, around about that where we are at the moment. Dow Industrials, S&P 500, NASDAQ all up around about 1.75%, 1.9%, that sort of area of the moves. Shares in the travel office sharing firm WeWork plunging yesterday following reports it could file for bankruptcy. Shares fell by more than 50% in New York yesterday. Meanwhile, the FTX founder and former chief executive Sam Bankman-Fried has been found guilty of defrauding his customers and lenders. A tentative sentencing date was set for the 28th of March next year. He's expected to be sentenced to several years in prison. Let's look at what's happening on Wall Street as we see the 24-hour markets get underway. We're holding on to the gains we saw on the Dow Industrials yesterday. Very strong day on the Dow with the 24-hour markets ending pretty much at the top of the candle. And it's the same thing really for the S&P 500. As I said, one of the strongest weeks this year so far, looking as though we're going to go into the last trading day of the year with gains, waiting on that non-farm payroll data out before the Wall Street cash session gets underway later on today. Now, before that, we've seen some economic data out in China, where we've seen the Caixin Services PMI data expanding at a slightly faster pace in October than had been expected by economists. The Caixin S&P Global Services PMI rising to 50.4 in October from September's 9-month low of 50.2. It does show expansion, pace of expansion of the services sector, which counts for about 48% of jobs in China, also remaining much slower than seen on average in the first half of the year. Caixin S&P's composite PMI, meanwhile, which includes both manufacturing and services, fell to 50 from 50.9 in September, marking the lowest reading since December 2022. Quick update on where we are in terms of other economic data. As I said, the big pivot point today is going to be the 12:30 p.m. UK time release of Nonfarm payrolls data for October. After the 336,000 print we saw in September, the market expecting a much softer reading this time of 180,000, nonetheless higher than the ADP this week, which came in at 113. Unemployment rate expected to remain at 3.8%, and average hourly earnings are forecast to rise 0.3% month to month and 4% year on year. And for this, we'll be taking a look at what's happening with the US dollar basket. Today, we're having another tilt, going below this rising line of support on the lower line of this channel, this pattern that we set up a while back, currently trading at 105.69, support at 105.51, and then any further weakness for the dollar will take it on down to 104.87. And this is manifesting itself in gains across the world in other currencies. The euro up for a third day at 106.31, and sterling, after yesterday's decision by the central bank to leave interest rates on hold, with an updated view on inflation and growth, they're talking about growth of 0.5% this year. You can see we're pretty much at the top of the candle today for sterling against the US dollar at 122.11. So that is where we're trading there at the moment for sterling against the US dollar. Now, every week we look at an event, risk event for the following week. It's now going to be a trading volatility risk or trade to look out for. And we are looking next week for Friday's November 10th release of the preliminary GDP readings here in the UK for the third quarter. Now, as we heard from the Bank of England on Thursday, the bank has projected that we'll see growth of 0.5% this year, year on year. We are expecting a reading slightly higher than that next week of 0.6%. But in terms of the volatility, I want to take a look at what's happening with sterling against the euro, because sterling against the euro is going to be outside of what's happening for sterling against the US dollar, which has had all sorts of influences coming through from the US. So we'll look at what's happening against the euro. You can see it's trading sideways. Now, if this does come out stronger than expected, we're fully expecting to see sterling rise, and the trade will be beyond the 200-day moving average. Now, there's all 5 days to go before we move into that GDP number. We've seen sterling fairly mixed recently, but if we do see the economy beginning to pick up in terms of growth, there is a potential upside to this story. That being said, this is just a retracement in what is otherwise a downside story for sterling against the euro. But I want to set this up with a long trade with the stop loss down here at 114.50. 114.85 is where we're trading. My price target is here at 115.35, which is the support line we saw there back on the 10th of August. And anything above there will then take you up to the 116 level against the euro for sterling. But that does depend very much on a strong GDP number coming through next week. We also have Halifax house prices next week. We've already seen the numbers coming through from the nationwide, which was stronger than expected. So if we start to get some stronger data coming through, and certainly so far as the Bank of England is concerned, it's expecting a drop in inflation and a rising growth into 2024 as well. If we do get a stronger than expected number, we could see upside for sterling against the euro. A volatility event to watch out for on Friday, November the 10th. Now let's go on to what's happening in terms of some of the corporates reporting. Not much here in the UK. We've seen a report out from Wix, a trading statement of the third quarter, but to be honest with you, it doesn't really tell us an awful lot any more than we already knew that Wix was doing okay, but it's just a question of steady as she goes. But I want to take a look at what's been happening with BMW. BMW has come out this morning. Group revenues up 3.4%. Remember earlier in the week we saw some good numbers out from Stellantis. We've got BMW up 3.4% in revenues to 38.5 billion. Group net profit, though, falling 7.7%. Now, this goes to show that the company's taking it on the chin of some of the inflationary aspects of what they're doing in terms of raw materials bought in. The carmaker's margin on earnings before interest taxes was 9.8% in the quarter. Carmaker also keeping its annual forecasts unchanged Now, look at what's been happening recently. We've seen a drop in the overall performance, but we have seen for the global automakers, the UAW strike in the States affecting other automakers as well. Last couple of days have been positive for BMW at 1993. It'll be interesting to see where this stock opens when trade gets underway at the top of the hour. We've got some support at 86.80 and some resistance up here at 99.65, awaiting the open of the German car maker after its third quarter numbers out this morning. Meanwhile, I want to stay on the charts because we got some numbers as well coming through from SocGen, France's third largest bank. As we know, that banks have been suffering recently, but it's been a pretty good week for banking stocks on the whole. GLE, which is SocGen included, this is the third largest bank in France. Better than expected quarterly numbers this morning. Resilient performance with its investment bank. Third quarter reported group net income coming in at 295 million euros, above the 168 million euro average of 13 analysts' estimates, which means it's a good number, which means it could well be positive at the start of today's trade at 21.61. If you're long on this, stock goes below the 2100 level, and the upside sort of area of resistance to watch out for is up here at 22.88. The problem is, though, it's down. The number today is down 80% from this time last year, as the bank booked 340 million euros in write-downs tied to some of its activities, on top of a 270 million euro provision for deferred tax assets. Another one to watch out for this morning is Swiss Re. Quickly dial in that share price as well. Been a really good run recently. Reinsurance rates have begun to harden, and these reinsurance companies have really benefited from this. And we saw this from Munich Re. We've seen it as well this week from AIG, which talked about hardening insurance rates generally. Net profit, $2.46 billion in the period, compared to the loss of 285 million this time last year. Beating forecasts this time around as well. The reinsurer sticking to its targets for full year. Do we go higher from where we are? Just want to take a look at the long-term chart here for Swiss Re, just to confirm where the record high was. You can see back here February 2020 before the COVID lows. But breaking this line up here is going to be significant, I think, from the 3rd of February 2022. That'll then take us back to those pre-COVID levels when we saw the stock fall. So looking potentially for upside here. Good result this morning from Swiss Re. Apple, late last night, posted fiscal fourth quarter earnings that beat analysts' estimates across a number of readings. However, overall sales fell for the fourth quarter in a row. Every hardware business in the group outside of the iPhone declined year over year, with big drops in the iPad and Mac segments particularly. Earnings per share, $1.46 against $1.39 expected. Revenues, $89.5 billion for the quarter. We've been looking for 89.3. iPhone revenue, $43.8 billion against $43.81 billion that had been expected. Gross margins, 45.2%. We've been looking for 44.5%. But as I said, the disappointing side of this was Apple Mac and iPad businesses both saw relatively hefty declines in revenues over the period. So it's really a company which is looking a lot at iPhones for generating a lot of the business. I want to show you what's been happening with the shares in Apple. Falling 1.9% all sessions on the IG platform after the results. Apple signaled the company may not return to growth over the Christmas and New Year period, which gave an extra steer on the downside. So Apple resting at the 200-day moving average, closing out yesterday's session, or all sessions on the IG platform, $171.53, looking like a lower start on Wall Street when Friday's trade gets underway. Meanwhile, we did see another company come through, and this is the company we follow when we tend to look at what's happening with Bitcoin. It's Coinbase. It's come through with numbers. Earnings per share, a loss of 1 cent. We've been looking for a loss of 54 cents. Revenue 674.15 million. Estimates of 650. The drop in quarterly trading volumes was most concerning for analysts. The company has had a bit of a lift recently from the crypto exchange's new agreement with stablecoin issuer Circle, but overall volumes have been down 76.1 billion in revenues. We've been looking for 80.1 billion, and a 52% drop as well from last year. Now, looking at what's been happening with Coinbase, this red dotted line up here is the IPO that we saw in the business back in March 2021. Since then, it's been trading, well, since the drop down below there in January 2022, it's been trading below the IPO price. We closed out yesterday's all sessions at 80.71 Now, before the earnings were released, Coinbase's stock had risen 148% year to date. While that's a pretty large rally in a bear market, the value of Coinbase's stock was still down 27% from the 52-week high of $114.43. But look at this candle shape here yesterday. Immediately after the close of the markets, we saw a 7% rise in the stock from the news out that it had beaten estimates. And then came this drop when they realized that trading volumes were down. And in fact, the stock then fell. But in fact, overall on the trading day yesterday, it ended up almost 1% on the session overall. So a very mixed bag, very volatile last night. But the end result was a small gain, which should result in a gain when we see Wall Street get underway later on in Coinbase shares. Let's take a look at what's been happening in oil. It's been an interesting week for oil. I want to show you what's going on, first of all, with US crude, because it dipped below the 76.4% retracement on this chart here. The 76.4% gave up on the 31st of October. But then we've seen in the last couple of days a move up on the price of oil to 82.74. And the oil price building on yesterday's rise. Let me just quickly show you and remind you what happened last week on the US weekly oil rig count, rising last week by a net margin of 1, adding rigs for a third week in a row to 625. Any additional rigs in operation means it's supplying extra oil to the markets. There's been a lot of debate this week about whether we're returning to growth. We saw some good numbers out recently from GDP numbers out from the US recently, and France showing positivity, but Germany showing a contraction. There's a real mixed bag of growth numbers coming through. So is demand going to pick up? There's a big question mark about that. Is supply going to be constricted? Well, if you look at the numbers and the intentions out of OPEC, they certainly don't want to release any more oil on the market. And the end effect of all this is that we've got oil pretty much where we ended out last week. So that's the Baker Hughes number. We've got an update to that at 6 o'clock this evening, UK time. 5 o'clock this evening, UK time this week. Quick update on spot gold. Third day in a row of gains, but it's really shallow gains. We're currently trading at 1986. That's it. About 12 minutes ago before the start of today's European session. Look at the gains across the board as we see things down there at the moment. Do watch out for SocGen in the French markets and BMW in the German markets. So also, if you've got a tilt at what's happening in Switzerland, you can also follow what's going on at the start of today's trade for Swiss Re. All three stocks could rise as a result of earnings out this morning. We're back at 10:30 with Charting the Markets, and then I'm back at 12:30 today, UK time, for Beat the Streets as we look towards the start of today's Wall Street session. And I'll be breaking the news headlines and taking a look at a trade around those non-farm payroll numbers.